We talk a lot about digital payments in India, the speed, the scale, the simplicity, and rightfully so. UPI is now clocking nearly 60 crore transactions a day. But what if I told you that payments are no longer the story? That the real action is shifting from money to identity? Because after scan and pay comes a harder challenge. How do you prove who someone is? Securely, at scale, and with consent. And the answer might just be unfolding inside a controlled little known environment built by UIDAI. It's called the Sandbox, and it could quietly shape the next 300 million users of India's digital economy. I'll break it all down for you right here on this episode of Point Break. In the last couple of weeks, AIM had the opportunity to hear directly from government representatives about their advanced focus on serving the public and how India's unique fintech solutions are setting a precedent for the world. At his keynote speech at the Bharat Inclusion Summit, RBI Deputy Governor T. Ravi Shankar, considered the architect of India's digital payments regulation, spoke about financial inclusion, which revolves around three key dimensions: access, usage, and quality. And at the Fintech Fusion India event, UIDAI Director Akshay Yadav discussed the government's mission to include startups in its efforts to accelerate UIDAI, or Unique Identification Authority of India. So what are they doing about it? We'll get to that right after I bring you all that's been making the waves in the world of AI. Used car marketplace Cars24 recently acquired the popular forum Team-BHP. While financial details of the deal remain undisclosed, Cars24 aims to enhance Team-BHP's tech and AI capabilities. Founded in 2004, Team-BHP is India's largest automotive forum, known for its independent reviews and community-first approach. The forum has over 4.5 million posts and 20 million annual visitors. Just recently, Cars24 unveiled Autonaut, an AI-powered multilingual automotive AI chatbots to enhance customer interactions. As AI continues to infiltrate every aspect of our lives, one figure stands out with a stark warning. Kunal Shah, the founder of Cred, recently pointed out an intriguing trend. Up to 60% of ChatGPT users engage with the platform for non-productive purposes, like companionship and entertainment. Shah made a compelling case for optimizing our time, urging people to measure the value of their hours by their per-hour income. His message? Focus on efficiency and productivity to truly unlock potential. In 2023, Shah said that AI could disrupt 90% of jobs within the next decade, urging individuals to stay relevant by upskilling in order to thrive in the AI-driven future.
I think just thinking about tools for productivity is going to be a challenge. And we have to remember one thing, that the largest employer of the world is inefficiency. Right? When you are moving to a world which is becoming hyper-efficient, many of the jobs that we currently hold may not be in the same shape and form that we are holding it to be. And the world is changing rapidly. Right? I'm old enough to tell you that I have managed to see the early days of a computer, to a mobile, to a touch screen, to a dial-up modem, to browsers, to everything. Now it almost feels like some of these changes are happening every month. And very soon some of these changes will happen every day. And how do we keep up, right? So the key point for all of you to think about is that one of the principles to think about is building for efficiency and not just getting stuck in the word tech, because many tech solutions are not efficient.
India's financial inclusion journey is rapidly transforming, and technology is driving that change. What's behind this evolution? At the Bharat Inclusion Summit, RBI Deputy Governor T. Ravi Shankar outlined how digital infrastructure is central to expanding access for underserved communities. He pointed to initiatives like microfinance and digital banking that are reshaping the financial landscape. Shankar also stressed the growing collaboration between Fintech and regulators, highlighting how this partnership is crucial for scaling affordable, innovative solutions and positioning India as a global leader in financial inclusion.
RBI, as I said right in the beginning, has always been leveraging technology and innovation to address gaps in collaboration with the fintech's ecosystem, gaps in traditional banking and other financial services. There were about 13,600 fintechs as of December 2024. India ranks third in terms of number of fintechs after US and UK. And this evolution is underscored by India's remarkable fintech adoption rate of 87%, surpassing the global average of 64%. Fintech platforms have expanded credit access to individuals and small businesses, lacking a formal credit history.
As we explore India's evolving financial landscape, it's clear that digital infrastructure is key. But beyond payments, the real question is, how do we build trust at scale? Let's dive into that.
The UPI, a flagship product launched in 2016 by NPCI, an entity set up by the Reserve Bank, has emerged as the most preferred mode of payment, with 59 crore transactions every day. That's roughly 80% or a little higher of total digital transactions. 59 crore transactions every day, amounting to 80,000 crores in value. The intensity of digital payment usage has shot up multifold. The number of transactions per lakh of GDP increased from 0.8 in 2005-06 to 56 in 2023-24. Small businesses in particular have found QR code-based UPI payments to be a cost-effective and efficient business enabler.
UPI is doing the heavy lifting. 59 crore transactions, 80,000 crore rupees moved every single day. But here's what no one's talking about. What happens after payments are solved? What comes after scan and pay? To find that answer, you need to shift your focus. Not to payments, but to identity. And that's where something quietly important is unfolding inside a UIDAI Sandbox. While UPI continues to break transaction records, UIDAI is laying the groundwork for the next layer of India's digital infrastructure. It's called the UIDAI Sandbox, a real, secure, and consent-based environment where developers can build and test Aadhaar-linked services before regulatory approvals kick in. The SWIC portal, which is Social Welfare Innovation and Knowledge, was launched by the Ministry of Electronics and Information Technology a few months ago. Under these rules, it's not just for banks or the government anymore. Private startups can now test KYC flows, face or iris authentication, OTP verification, and digital credentials all inside a controlled ecosystem. And it's not built for urban power users. It's been designed to run on low-end smartphones using 5MP cameras, supporting regional languages and simple UX targeted squarely at Tier 2 and Tier 3 India. So what exactly can be tested? Digital check-ins at hotels, no photocopies, no paperwork. Face-based KYC flows for lending and onboarding. Voice-assisted authentication in Vernacular. And lightweight SDKs for frictionless integration into apps. The goal is simple. Build what works in the real world, not just in boardrooms. And critically, developers can do this without waiting for regulatory green lights. It's innovation that's testable before it's public. So why does all this matter? UPI solved how to pay, but India's digital future depends on who's paying and whether they can be trusted. As UIDAI's director Akshay Yadav pointed out, face authentication is up 500% since 2022, and it's working on basic devices, not premium tech. More importantly, the sandbox is enabling data minimization and consent-first models. Services can verify only the required information, not the entire Aadhaar profile. It's a shift from blanket access to purpose-specific trust.
Previously, Aadhaar authentication was restricted to government entities, whether central or state government, or to regulated entities which were under a regulator, correlate to whether you were regulated by RBI or you were regulated by SEBI. Now the social welfare innovation and knowledge rules, and hereafter I will refer to them as SWIC rules, have been opened up to all private entities. Why they have been opened up? We have 140 crore as a population. Population has got adapted to validation. For any process to be built up or any service to be given, each one of us expects a KYC to be done. This KYC is a trigger for customer due diligence, which we want to build into every onboarding journey for any process, be it bank account opening, providing insurance, providing credit, buying a car, everything we want a customer validation to take place.
So while UPI has already redefined the scale of digital transactions in India, UIDAI Sandbox is asking a deeper, more difficult question. Can we scale trust and consent with the same intensity? Because this isn't just about moving money. It's about verifying people, protecting data, and building infrastructure that works not just for early adopters, but for everyone. And that's where the RBI's perspective adds real weight.
RBI also operates a Payment Infrastructure Development Fund, PIDF, which subsidizes deployment of payment acceptance infrastructure such as POS devices, QR codes in Tier 3 to Tier 6 centers. Northeastern states, Union Territories of Jammu and Kashmir and Ladakh, and also beneficiaries of PM Swanidhi scheme and PM Vishwakarma scheme in Tier 1 and Tier 2 cities as well. Nearly 4.22 crore devices have been deployed under PIDF since 2021, of which nearly 53% were deployed in Tier 5 and 6 centers.
UIDAI Sandbox doesn't offer scale yet, but it offers something more foundational, a place to build for the edge cases, the slow adopters, the Tier 3 towns, and the next 300 million users. And that's the shift happening right now. We're moving from how to pay to who pays, how safely, and with what consent, from access to actual use, from infrastructure to impact. And we'll be keenly watching its progress. That's all for tonight's episode of Point Break. But don't worry, I'll be back with more stories to take you deeper into the tech shaping tomorrow. Until then, stay curious, stay sharp, and think AI, think AIM.